What is going on, everybody? We are back again with another trade breakdown, and I know you guys typically see a lot of wins on my channel, but I want to show you the transparency in the side of trading and show you a loss that I actually took today. I know it's very rare for people to show that in the trading community, but I want you guys to understand that I'm not a robot. If you take losses, don't be discouraged, because that's just a part of the game. It's a part of the business. It's part of a winning system. Everybody takes losses. It's just how the game goes. Now, the way that I did take the loss, I'm very happy with. This is a trade that I would take 10 out of 10 times every single time that it presents itself. Now, again, another forever model trade breakdown. I took it on the Dow Jones, and the way that I managed it, I want you guys to study this whole process and how I did my higher time frame analysis to lower time frame execution, knowing when I was ready to execute while at the same time reducing my risk while I was taking this live in front of my Discord. So without further ado, let's hop into the charts and get right into the entire process as to what happened today on December 6th. All right, so moving down to a daily time frame and monitoring price from a higher time frame perspective. That is the best way to go about looking for high probability trades. You want to make sure that everything is derived from a higher time frame, correct? Now, as you guys know, we have been trading higher. We have been trending in bullish order flow for quite some time, ever since we created the SMT at these corresponding lows from where I displayed to you guys in the last trade breakdown that I did. Now, in this case scenario, I didn't take a trade on Monday, and I was looking to trade a continuation play based off of how the daily candle printed from Monday. I wanted to see, I sent a message into my Discord. This is exactly what I said. I'll drop it on the screen here. I gave a depiction that I wanted to see an SMT divergence be occurring inside of the daily bullish fair value gap that we have resting here. As you can see, on the Dow Jones, we actually traded aggressively lower, having a decently sized body candle on this daily time frame. And the S&P 500, not so much. Like, wick was pretty much the same size of the body, while the NASDAQ actually had a heavier sized wick. So with that analysis coming into play, what I wanted to see was the Dow Jones running out the previous daily low, and either the S&P 500 or the NASDAQ failing to do so. Now, if price came down and ran previous daily low while the other two assets failed, what would that create? That would create an SMT divergence inside of a higher time frame key level. Am I right? That is step 1 and 2 of the forever model that you guys should know by now. So I wanted to see price kind of create something like this moving into the new day, as I depicted in my channel within the Discord. So fast forward to seeing exactly how this candle printed for the day. You guys can see this. If I take off replay mode, what did we do? We had exactly what I wanted that I depicted on my previous game plan. I wanted to see that SMT be created just like this and like that. And I wanted to see expansion after that. I wanted to see price trade higher to the daily external range high that we had here, daily external range high that we had here. And as you can see, we did the same thing while taking out that previous daily high on the NASDAQ. Now, since we have a higher time frame view set in stone, what do we have to do next? We have to look at our intermediate term time frames, hourly, 4-hour chart. So let's look at that. Just because the daily was clear, now we need to make sure the 4-hour and the hourly are aligning, giving us some sort of depiction where an opportunity to lay on risk would be given easy. All right, moving along. Now looking at an hourly time frame from that daily bullish fair value gap. We're just kind of making our way in regards to time frame alignment. Daily, 1 hour, potentially 5-minute execution, right? So if we have price before equities open, this is the 8 a.m. hourly candle resting right here. The next hourly candle, 9 a.m., then 10 o'clock. So what I wanted to see, and you guys kind of know the drill, I need to see what happens. This is also, keep in mind, this is a no news day. So I'm regardless waiting for 9:30 to come in to know what is going to happen next. And as you can see here, we had price trade inside of this hourly bullish fair value gap on both NASDAQ, S&P 500, and the Dow Jones, right? The same hourly bullish fair value gap. Now, what is like signified inside of this hourly gap? What do we need? We need an SMT divergence to occur in order to take a trade, right? Now, there was an SMT inside of this hourly gap, but the timing was off. Now, where was it? See how the Dow Jones ran a lower low between the 5 a.m. and the 7 a.m. candle, and then see the same thing with the S&P 500. Higher low here and a higher low here. But now, this timing is too early. I'm not taking a trade right now, right? I need to wait for equities open to come in. I need to be patient because we already used the hourly gap and took out the hourly external range high. So I'm not going to do anything premature. I'm going to wait. I'm going to see how this next hourly candle sits in, and then I'll take a trade. So I'm going to skip one hourly candle to the closure and inclusion of 9:30 open because also a lot of my trades, you guys know this by now, are happening after 10 o'clock, right? So let's skip to the next hourly candle now. Look at what we do here. On the NASDAQ, we take out the previous daily high. On the S&P 500, we create more so of like a doji candle, indecisive candle. Look at the Dow Jones resting here. The Dow Jones actually trades a little bit lower inside of this hourly bullish fair value gap here while creating more SMT divergence, right? So once I saw this, I was like, all right, cool. This hourly candle looks decent. And it is giving me an idea that if we are going to trade higher, and if we're going to trend higher to continue to follow suit as to what NASDAQ did here with this clean hourly candle closure, I want to try and get on side of the market here. So I focused on the Dow Jones. So we just did our analysis on our hourly chart. Let's see how we could potentially get on side of this move on a 5-minute time frame to know how is price trading on the lower time frame within this wick to know what to do next for 10 o'clock for the new hourly candle and 4-hour candle. All right, so dropping to a 5-minute time frame. Again, this is before 10 o'clock, before the new hourly candle comes into play. That new hourly candle comes into play in the next 2 5-minute candles. This is 9:50 right now. I'm watching that hourly gap that got tagged, the unmitigated one, and the creation of that fresh SMT, because you guys can see here, we had a push higher, and then we had equities open, did a little bit of damage, came lower to do what? To come tag that hourly fair value gap. Now, all I need to do right here is wait for the reaction from this hourly gap. How could I potentially get into this trade? For the people that know, I need 2 things to happen: fair value gap, SMT divergence. We have step 1 and step 2, right? Step 3 is waiting for the change in the state of delivery to then execute a trade. But which change in state of delivery, which candle would I need to get into a trade? So I have a down close candle at 9:30, the equities open candle, that actually clears liquidity. Now, if price can close above that down close candle resting here, that could be my order block and my change in the state of delivery that I could utilize as a trade execution. So I want price to come above, close above the opening price there, get an entry in there, and then target any resting buy side above. So that was my original first plan for a trade execution. 5-minute candle on 9:55 closes above and confirms it. So what did I do? I told my Discord while I was trading this live, I'm going to try and long the Dow Jones from that order block tag, my stop loss going at the candle low, and then targeting a 1 to 2 risk to reward just like that, which is just shy below the buy side liquidity resting high here at 47,619. Now, I'm anticipating price to open up lower to then go higher. So I want to see a 4-hour or an hourly open low high close. That's my anticipation. I have everything marking off on my forever model. You guys should know this by now. And all I need to do is just take the execution. So I put my limit in. Next 5-minute candle does this. So Next 5-minute candle comes lower, but misses my tag by 4 points, unfortunately. But what can I do at this point? After I see this next 5-minute candle displays higher, how can I move next? I need to react and adjust based off of the current conditions that I'm getting. So I go up a little bit. I have another 5-minute candle here from the previous 5-minute, 925, down close candle here. Also clears liquidity, and then we close above it. So I readjust myself. I'm doing all of this live in front of my Discord. I drag my execution up higher, just like this. My stop loss goes at the candle low that ran the short-term low, and I'm looking for the 1 to 2 risk to reward, just like this, which is just shy above the external range target that I would use as a buy-side liquidity pool draw. So that's what I did. I reacted and adapted. So I said to my Discord, I'm going to put a limit in at that order block at 47,488. Next 5-minute candle. It gives a tag in for some people, but not everybody. Next 5-minute candle tags me in here. And then I'm like, all right, cool. I'm in the trade. I like the reaction here. Boom. Next 5-minute candle after that. After this candle closure here, some people in the group went break even. I said to them, I'm going to drop my risk down to the 5-minute candle low from 10 o'clock. Because what am I anticipating here? I'm anticipating price to give an hourly open, low, high close to then reach that draw on liquidity. And we were more than halfway there, as you can see. So I reduced my risk basically to half, and I was completely comfortable with this trade. And no matter what happened, all I know is that I did my analysis, I executed the model to perfection, and I managed my risk to perfection. Now, next 5-minute candle, consolidation, and then unfortunately, next 5-minute candle does that. And that's kind of how the cookie crumbles in this game. I would execute this trade 10 out of 10 times every single time it presented itself. And losses are a part of the game. You just need to stay disciplined, stay dialed in, trust your model, and understand some days just don't give the best price action. Because if I take away the replay mode, look at how we moved for the remainder of the day. For the remainder of the day was a complete barcode. And this, and days like this, would have been my kryptonite when I was younger. Beginner trader old me would have been blowing multiple rounds of accounts. Blowing account, rebuying, blowing account, rebuying, because I would have been so chopped up in this entire move here. But what did I do? I took my loss. I was going to look for another re-entry. I never got it. And I moved on to going to the gym, going about my day. And that's exactly how all of you should move in conditions like this. Recognize when the market is not ready to offer a delivery that is clean with speed to a draw on liquidity. And once you can see that, you can identify it. It could have saved you so much money on blowing accounts and re-entering on the same idea that you are just continuously married to. There's always going to be another trade. Every single time one wave crashes, there's always another one forming behind it. Understand that, learn it, recognize, adapt, and you will be fine in the long run. This is a marathon, not a sprint. Now, I hope that this was helpful for all of you in learning my process from top-down analysis. I think these are the best way for me to depict trade breakdowns for you, giving you a logical explanation as to what I think price is doing in that day and why I did the certain things that I did. I hope that my explanations are clear, and I just want to make sure that you guys know that if you are losing trades and feel down on yourself, it's just a part of the game. Losses are a part of a winning system, and I want you guys to all remember that. Just a matter of how you manage the losses and how you can come back from them. But hope you guys all enjoyed. Like, comment, subscribe, and like always, good luck, good trading, and I will see you in the next YouTube upload. Be safe, everybody. Deuces.